Okay, so let's move on to our next company here. Let's see. We're talking about T-Mobile. I know they got rid of that. How do I say this? That exotic CEO.
John Ledger, I think
Yes,
his name was.
yes,
Yeah.
yes,
Yeah,
yes.
but he called what Verizon and AT&T dumb and dumber,
Dumber.
and yeah, he was a good CEO though. I
Oh
think.
yeah,
I mean,
he
he
did
really
a great
put
job.
T-Mobile on the map. I mean,
Yeah.
they've done phenomenal.
But he was rather eccentric, I think the word was. He had some crazy things he said. But anyways, at T-Mobile, their symbol is TMUS in the telecom services industry. Not much short in the flow, 3.2% short. That's not bad. I don't understand this. Institutional ownership only 37.5%. I wonder if there's more than one class of share here, or is this owned a lot by individual people? That's kind of
What was
surprising.
the institutional ownership?
37.5. Usually it's in
Wow.
the 70s, 80s minimum.
That is interesting.
Yeah, institutions, because that includes what, your mutual funds, and foundations, yeah. So that's surprising. See if we can look at that while I'm kind of doing this here. But PE ratio looks, 21.7 versus 22. That's okay. Price of sales is expensive, 3.1 versus 1.3. Price of book value, very expensive, 4.1 compared to the industry at 1.7. Price of cash flow, 10.7 versus 4.7. And the PEG ratio is only 0.9. There's nothing there for the industry. Now, the earnings over last year, up 39.3% above the industry at 24.5. Their sales rose by 5.3%, which is also above the industry at 0.7%. They still are expected to have a high growth rate based on the analyst for the 5-year earnings per share growth estimate at 21.7%, while the industry is expected to decline by 5.5%. I don't know what they're doing to get that type of growth rate, but they got something good going on here. Dividend yield on the dividend about 1.6%. They use 30% of their earnings to pay that out. Balance sheet current ratio 1.2. That is better than the industry at 0.9. Debt to equity is high at 2.0, but this is a high debt industry. 2.1 is the industry average. They do also have a lot of intangible assets. 53.5% are intangible assets, and those can be dangerous because if the value declines on those, got to write them down. That can actually hurt the company's balance sheet, so be careful of that. Net profit margin for T-Mobile, very good, 14.4 versus 8.8. Return on equity, 19.5 versus 15.2. And free cash flow, $11.9 billion versus $9 billion for the industry. Pretty impressive there. What do you got?
Yeah, so current price here for T-Mobile, again, their ticker symbol TMUS. It's $221.52, 52-week range. The low here, $173.74, has fallen from the high of $276.49. Stock's done well, though. Over the last 5 years, it's up about 110%. Over the last 10 years, you're up about 472%. So, again, I'm pretty sure his name was John Ledger, CEO. I mean, he really did, I think, a great job growing this company. And now the new CEO, I'm not sure who it is. It appears that the business has been running on all cylinders. My wife actually uses T-Mobile. I think if I wasn't on the company plan here for my phone, I think I would probably be on the T-Mobile plan because we use the T-Mobile internet. It's great. And then I get free Netflix, I get free Hulu, I get free Paramount Plus, I get free Apple TV. So my streaming costs are now $8 a month. I know you're talking about cable. I am way ahead in terms of how much I used to pay for cable versus how much I pay for my streaming services now. So, I mean, I like T-Mobile. I think they do a great job in terms of the service side, but I don't think I would buy the stock. And I say that because it's still expensive. You go out to December 2026, you see estimated earnings per share here of $12.69. You apply that 16.6 multiple to that, we get a target sell of $210.65. So the stock still trades over 17 times earnings.
And I'm wondering, because you mentioned that you get free Netflix, free
Paramount Plus, free Hulu, and free Apple TV.
Okay, so how are they doing that? There's somebody that has some type of deal with those companies, but it's not free.
Oh, yeah.
Somebody's paying for it. They paying for it. They're giving something else up on it. I mean, I'm not asking if you know the answer, but I'm just put that question out there because it does worry me a little bit.
I mean, my guess is, you pay for the phone line, and it's still not inexpensive. And this is the thing that sucks. When you have one person on the phone line, it's like the same cost, essentially, of having two people.
Yeah.
You get screwed being a single person in the phone system. So let's say that's $100 and something a month. Plus then you have, the home internet. I think we pay around $50-ish a month. So we're paying $150 for phone and internet. Well, then they probably get some deal from, I'm big on Hulu. That's $10 a month. Maybe they get it for $5 a month. So you're able to kind of offset some of that cost because they're buying in bulk, but then they still have such nice profit margins from the phone and the internet to kind of then go out and negotiate on behalf of the client potentially to get better rates for the different streaming services.
Yeah, I just, well, do you mind just disclosing what Taylor pays for what you pay for one?
It's $150. I believe it's $150 a month for phone and internet.
Oh, for phone and internet.
Yeah.
Okay. All right. Because I know for my Verizon, I pay for 2 phones. I think $118 a month.
That's what I mean. If we were to add a phone line, it wouldn't go up very much.
Are you trying to convince me to buy T-Mobile for our company?
No, it's really not any different in terms of the cost.
But I have heard. I know my wife, when she had T-Mobile, she had a lot of places. Like even going to my house in North Poway, she'd lose connection.
And I'm not sure. I know they invested a lot of money in 5G, buying that broad spectrum or whatever it's called. I'm blanking on the name of it. But that, I think, has maybe helped the service a little bit. But again, I'm not an expert in terms of the actual technical side of things. But yeah, Taylor's phone, my wife's phone, I haven't noticed any issues.
Next time she comes to my house, see if she can get it, because I kind of live in the back area of Poway, and see if she loses connection or not.
Yeah, and I did want to say one other weird thing, though,
Sure.
about T-Mobile. The stock actually was down this past week. SoftBank is actually a large owner of their shares. As of March 31st, they held about 85.4 million shares, which was about a 7.5% stake in T-Mobile stock. They actually ended up selling about 21.5 million shares this past week for about $4.9 billion, which is about 2% of all T-Mobile's outstanding shares. And again, they still have a good amount. Or are they going to continue liquidating that? That could put more pressure on the stock. But I was shocked by this. I don't understand this part of the story. There's Deutsche Telekom. They own, and these numbers are crazy to me, direct economic ownership is 46.2% of total outstanding shares.
Oh, T-Mobile.
T-Mobile.
Could that be why the
That's what I
institutional ownership was so low?
Yes,
Yeah.
that's what I believe. And, I'm not sure what their plans are in this situation. But again, if they start being like, we need to monetize assets, we're having a hard time with our own personal cash flow. We have this economic ownership in T-Mobile, we're going to start liquidating that. That, again, hurts T-Mobile stock. And we know that T-Mobile's valuation at, again, I'll call it 17 times earnings, is much higher than Verizon and AT&T.
Yeah. So
I think more than double.
they've done well over the years, but I just and that's why probably SoftBank could be unloading some of it because they had great profits. But actually, it wasn't that phenomenal. I think you said the 10-year return was what, 400% or 486 or something. Yeah.
Which is really good.
Yeah. Well, I mean,
We save your money a dollar every 10 years. That's pretty good. That's way more than
Yeah.
double.
Yeah. I guess I was expecting something higher. That's what I was thinking. So not it very good, but not as good as I thought it was going to be. So, well, let's